All right, folks, welcome back to Dividend Mondays. And each week I talk about a dividend stock. And today's video is all about PPL. Is it time to buy it, sell it, and all that good stuff? And also, I'm going to break down the dividend slash as well when it comes to this particular company. Now, in addition, I will go over 10 things I look for when buying a dividend stock. It's not the only thing I look for, but it's some of the things I look for when buying a particular dividend company or just have an idea of what I'm going to do with that particular stock. So let's jump into today's video. So it's all about PPL Corporation, ticker PPL. Now, if we're not familiar with this company, PPL is a utility holding company that delivers electricity and natural gas. Now, the first thing I like to look for in a company is their credit rating. In PPL case, it has a Baa2, which is a check here. I like a company that has a credit rating of a B or higher. I avoid investing in companies that have a low credit rating, but keep in mind, not every company has a credit rating. So every company I'm going to do a video on, you may not see that. All right. In addition, I like investing in companies that have a dividend yield of 3% or higher. That's not a hard or fast rule because I do have Microsoft and Apple. In this case, they have a check mark for a dividend yield of 3.03%, but that's a little misleading because they actually cut their dividend, so it used to be higher. So it's still a check mark because it's above 3%, but they basically slashed it in half. So it was closer to 6% prior to the dividend cut. Now, their dividend payout ratio is above 100%, but there's a lot of factors involved with that. So that should be changing within the next year or so. The 3 years dividend growth rate, I like to see a dividend growth rate of 5%. Here, they cut their dividend, so there is no growth rate for the past 3 years. That is over with. PPO corporate management slashed the dividend around 52% to 20 cents per share. Before it used to be 41.5 cents a share. Now it's 20 cents a share, which definitely sucks as a dividend investor to see your money cut basically in half. Now, the new dividend payment is based on projected earnings per share from PPL existing business operations in Pennsylvania and Kentucky, and the company's target payout ratio of 60 to 65%. So as you can see, that's their new target payout ratio moving forward. Now, in addition, they did used to have holdings in the UK, which they no longer have anymore. This company is in transition. So let's move forward looking at my 10 points. I like to see a company, I just like to kind of take a look at the forward PE. Here is 18.38. This one right here, I don't have a hard and fast rule. It really depends on the sector and the company. I think the P ratio is fine. Here, I like to see the shares outstanding is decreasing rather than increasing. Because if it's increasing, that means they're diluting my shares, which I definitely hate. Here, I give them huge marks for at least decreasing the shares outstanding. So kudos there, PPL, but I'd rather have my dividend. But, everybody's different when it comes to either buying shares or higher dividend income. All right, so return on equity, I like to see 12% or higher. Here, the return on equity is a negative at 0.013%. Definitely on the low end, but this company is definitely in a transitional state. The revenue growth is in decline. Um, Basically, 57% decline year over year. But keep in mind, they are going through a transitional phase. But still, I do not like seeing negative growth. But I do give them, if you're looking to actually buy into the stock, their 52-week high was $30.72. I like to buy into a company at a 10% discount. So they are trading at a 10% discount or more right now, which is somewhat positive, I guess. Um, in this particular case, Not really quite sure about that one. All right, so in addition, I like to look at their 5-year chart of a company that I'm buying into because if I owned this company 5 years ago, if it is down, like in PPL case, if you look at the 5-year chart, it's down almost 30%. I have to ask myself a question: is it down and is it about to make a turnaround? Like in this case, PPL is trying to make a turnaround like AT&T, and T, and if so, do I believe it can make a turnaround, or is it just a dying company? I'm just going to lose money in year after year. In this case, I'm not too sure, but it's definitely a negative. My average in PPL is $20.43. I got in 2019. I bought the dip. It was looking pretty good here and there, but overall, currently, I am down on this particular holding. And imagine being this company 5 years ago, that would have been worse. So that's why I like looking at a 5-year chart. It was looking, it had its moments here and there on this particular company, but now it's definitely not looking too great. Moving forward, though, when I look at my 10 points as a plus for credit, plus for dividend yield, a negative for dividend payout, a negative for dividend growth, a positive for stock buybacks. It has a negative for return on equity, a negative on revenue growth, a positive for trading at a discount, but who knows if the stock is going to continue to drop. I think it's going to basically hover around the mid 20s. The stock's been in the last couple of years hovering around 25 to $30 or 28, 25 to $28, give or take, with this particular company. So probably hover around there for a little bit longer. But this is a company that is shifting towards a more US based company, selling its UK utilities, like I said earlier. But they do plan to create an acquisition with, I'm going to butcher the name, Nuragenet Electric Company in Rhode Island. Now, PPL said it anticipates receiving a final order from the Rhode Island Division of Public Utilities encouraged by March 2022. So you can definitely see this company is definitely in transition. There's a lot of moving parts. With a US focus, they are going to buy a new holding in Rhode Island. So we'll see how things go with PPL. I'm probably definitely going to do some more research as far as the Rhode Island acquisition that they're considering buying. But for me, I do plan on possibly selling this stock in the near future when I find something else I like better. But in the short term, I don't plan on selling it until I find something else. I don't want to just hold the cash in my account. But this is definitely one of those stocks that probably will need to go. So we'll see. But if it starts making a turnaround before I sell it and I like where it's going to go, I may keep it. But as of now, I'm definitely looking and selling out a few shares. If anything, I might just sell out some of the shares, but we'll see. We'll see how that goes. But overall, don't forget to like, comment, and subscribe. It really helps out the channel. And just a disclaimer, I'm not a financial advisor. This video is strictly for entertainment purposes only, and any investment may involve risk. As you can see in my case, owning PPL, it put a hole in my pockets. Luckily, it wasn't that deep. Until next time, everybody, let me know, do you own PPL? What are some of your favorite utility stock companies? Peace.